Most people think global power is built by size, big countries, big populations, big armies, big land. When we imagine a place that controls trade, finance, and technology, we usually picture a giant nation stretching across continents. But then there is Singapore, a tiny island you could drive across in less than an hour, somehow becoming one of the most important hubs on Earth. The mystery is not just how it became rich. The real mystery is how a place with almost no natural resources, no oil, no gold, and no farmland, turned itself into a center of money, shipping, technology, and diplomacy. It is like finding a small boat in the middle of the ocean, somehow steering the largest ships in the world. And the answer is not luck. It is not magic. It is a chain of decisions, risks, and moments where everything could have collapsed. Long before glass skyscrapers and glowing skylines, Singapore was simply a trading post, a humid island covered in jungle, sitting at a narrow water passage between two giant oceans. Ships moving from Asia to Europe and Africa had to pass this route. Geography gave Singapore a gift, but geography alone never guarantees success. Many ports exist. Few become global centers. In the early days, colonial powers saw Singapore as a convenient stop, not a future powerhouse. It was useful, but replaceable. That was the first illusion, the idea that Singapore's future would always be small because its land was small. Then history twisted. Wars shook Asia. Empires weakened. Trade routes shifted. Singapore changed hands and faced invasion, uncertainty, and poverty. There were moments when its survival itself looked doubtful. The population was growing, jobs were scarce, and resources were limited. Many countries in similar situations fall into chaos or stagnation. But Singapore's turning point was not a discovery of wealth underground. It was a discovery of discipline and direction above ground. Leadership began to focus on something invisible but powerful: trust. Trust in laws, trust in systems, trust that businesses and citizens could rely on stability. This sounds simple, but trust is one of the rarest resources in the world. Without it, money flees, talent leaves, and growth stalls. With it, even small places can attract giants. The government invested heavily in infrastructure, education, and clean administration. Instead of promising quick riches, they promised order and long-term planning. Ports were modernized. Airports expanded. Schools improved. Laws were enforced strictly. These choices were not always popular. Some decisions were tough and demanded sacrifice. But cause created effect. Better infrastructure attracted shipping companies. Efficient ports reduced waiting time. Reduced waiting time meant lower costs. Lower costs meant more ships chose Singapore. More ships meant more trade. More trade meant more revenue. A cycle began to build on itself, each improvement feeding the next. At the same time, Singapore understood a quiet truth about the modern world. Information moves faster than goods. While containers filled with electronics or clothing traveled by sea, money and data moved by cables and signals. So, the country aimed not just to be a physical hub, but a financial and digital one. Banks were welcomed. Regulations were designed to be clear rather than confusing. International companies found a place where contracts were respected and corruption was low. In global business, certainty is more valuable than cheapness. A predictable system beats a risky bargain. This is how skyscrapers filled with offices instead of empty floors. But success did not come in a straight line. There were breaking points when the strategy could have failed. Economic crises hit Asia. Global recessions slowed trade. Competition from neighboring ports increased. Each shock tested whether Singapore's model was strong or fragile. Some companies left, some investments paused. The fear was always the same, that a small nation could be easily overshadowed. Yet each crisis forced adjustments instead of surrender. Policies were revised. Industries diversified. Technology was embraced faster. The mindset was not, we are safe, but we must stay useful. That difference is subtle but powerful. Safety creates comfort. Usefulness creates survival. Another hidden factor was human capital. With limited land, Singapore realized its real territory was the skill of its people. Education was not treated as decoration. It was treated as infrastructure, just like roads and ports. Skilled workers attract advanced industries. Advanced industries bring higher income. Higher income funds better education. Again, a cycle formed. This focus also helped Singapore shift from simple manufacturing to finance, biotech, logistics, and technology services. When one sector slowed, another could rise. Flexibility became a shield. Still, not every attempt worked. Some industries failed to take off. Some policies needed correction. Urban planning experiments had mixed results. Housing challenges emerged as prosperity increased demand. No transformation is perfect. The difference was speed of response. Problems were not ignored until they exploded. They were adjusted early. Failed fixes became lessons instead of disasters. This created a reputation of competence, and reputation itself became an economic asset. Investors often choose a location not only for profits, but for predictability. Singapore cultivated both. As decades passed, the island's skyline changed from warehouses to towers of steel and glass. Airlines connected it to almost every major city. Ships queued at its ports like cars at a busy intersection. Financial flows passed through its banks. Technology firms opened regional headquarters. Conferences, summits, and negotiations chose Singapore as neutral ground. Neutrality itself became a service. In a world divided by politics, a stable meeting place holds immense value. The country was no longer just a hub for goods. It became a hub for ideas, diplomacy, and innovation. Yet prosperity brought new questions: high living costs, pressure on space, dependence on global trade. The very openness that made Singapore powerful also made it sensitive to global shocks. When world trade slows, hubs feel the tremor first. This is the paradox of interconnected success. Strength and vulnerability grow together. To manage this, Singapore continued diversifying, investing in research, green technology, digital infrastructure, and advanced logistics. The lesson repeated: standing still is the fastest way to fall behind. What makes this story fascinating is not just economic growth, but mindset. Singapore did not try to be the biggest. It tried to be the most reliable. It did not compete on land size or natural resources. It competed on efficiency, speed, and trust. In a world obsessed with scale, it focused on precision. In a world chasing attention, it focused on consistency. The cause and effect chain is clear. Discipline created stability. Stability attracted investment. Investment funded education and infrastructure. And those investments reinforced discipline again. A loop of intentional design rather than accidental fortune. There are three clear takeaways from this journey. First, geography gives opportunity, but policy decides destiny. A good location means little without smart systems. Second, trust is an economic engine. Transparent rules and reliable institutions can be more valuable than natural wealth. Third, adaptability is survival. The world changes fast, and the places that update themselves faster stay relevant longer. These lessons extend beyond countries. They apply to companies, communities, and even individuals. But there is also a warning hidden in this success. A hub exists because others need it. If global flows change direction, the hub must reinvent itself or risk fading. No position is permanent. The same speed that built Singapore's rise could, in theory, accelerate decline if innovation ever stops. The story is not finished. It is a moving process, not a completed monument. The skyline may look solid, but the real structure is invisible policies, skills, and trust, and those must be maintained constantly. So the next time you see a map and notice how small Singapore looks, remember that influence is not measured only in land or population. Sometimes it is measured in connections, in reliability, and in the ability to turn limitations into leverage. The island did not become a global hub by pretending to be large. It became powerful by mastering what it had and refining it again and again. And that raises a final question worth thinking about. In a world where technology shrinks distances and reshapes trade, which places will adapt next, and which will assume their current position is enough? If this story changed how you see global power, then you are already looking at the world differently. Curiosity is the first step toward understanding how systems really work. Stay curious. Keep questioning the assumptions behind headlines and skylines. And if you want more deep stories about how nations, economies, and ideas shape the world around us, consider subscribing and joining the journey.